Here are a couple of more interesting value stock picks from our value stock strategist, Tracey Ryniec. This one is kind of humorous. The OFG Bancorp.
Right.
Now,
It's
almost like OMG, but I was tempted to say that, but I won't. Formerly known as Oriental Financial Group.
Right.
Hence the OFG.
Exactly, and that's their ticker. I think people always used to get confused because we used to talk about Oriental Financial Group. What did that mean? Because they're in Puerto Rico. So some people might have thought they were an Asian bank or something. They always had that name, but recently they acquired a whole bunch of branches from BBVA. And so they really expanded their number of branches in Puerto Rico. So they're pretty big now down there. And I think they took that as an opportunity. Oh, we can change the name while we're expanding the business here. So that's what they did. So now they're OFG Bancorp.
Works great for texting, I guess.
Yeah, it's easy for sure.
In shorthand.
Yes. But they're an interesting bank. I've covered them many times over the years. They initially weren't affected at all by the mortgage crisis because they were very conservative in their lending down in Puerto Rico, so they didn't get caught up in everything. Of course, as being a bank stock, their shares got hammered down.
Yeah.
But their books were actually pretty solid. And now, like I said, they've been expanding. They just recently acquired all these branches. And in the second quarter was really good for them. They blew out the number by 31 cents. None of the analysts thought it would be this good, even though they were trying to model for the acquisition of all these new branches, but they couldn't. They saw everything across the board was really good. They saw increases in both, commercial and consumer deposits. They saw record revenue on their wealth management side. Obviously, stocks and other assets are rising, so that's what's happening in their wealth management division. They saw loan growth, which is what you want to see. So it was just a really good quarter. The analysts are trying to catch up. I put up the earnings estimates here, and you can really see them jumping more than the 31 cents. And earnings growth this year is supposed to be 131%.
I was just looking at that.
Yeah.
That's a huge number.
It is, but a lot of that is because of the acquisition of these new branches, and that deal is basically done now. So now you're seeing the benefits of them acquiring all those branches. So that's big. Next year, not quite as good so far, only about 5% earnings growth, but we'll see if that changes as it goes along here. Because
you're not going to get triple digits every year.
No, and certainly not from a bank. But this bank, even though the Puerto Rican economy isn't that great right now, is doing some things right because it's so dominant down there. And it does have the small to medium-sized businesses, and then it has kind of the wealthier regular clientele who's they're doing the wealth management for. So it's in a good spot. You can see the chart is really taken off in 2013, but a lot of the financials have. It's trading around a little under 10 times, not real expensive for a bank, and you do get a small dividend with it. I think it's like 1.3%. So, if you're looking for a bank that is in the outside the continental U.S., but follows U.S. banking laws and, is growing, this might be one you want to check out.
All right. And then something else you might want to check out is Whirlpool. Everybody knows that name and who buys appliances.
Right.
What's going on here?
Well, Whirlpool is really a play on the housing recovery, but it's also been, the last couple of years, a real play on the emerging market recovery and the middle class expansion in, Brazil, especially, China, Turkey, any of these other countries where now people are going to go out and buy the washer dryer or the dishwasher. That's just a huge item, and Whirlpool has really been cashing in, especially in South America. They had a really good second quarter. They beat the estimate. Then they also raised guidance by about 25 cents per share. And I'm putting up, here you can see the price and consensus chart. It was a little rocky a couple years ago because, housing hadn't recovered yet and people weren't spending on the appliances. And certainly there wasn't an uptick in new construction where you're going to put the appliances in. But now things have changed, and you can see that it's nice earnings growth expected in the next couple of years, like 40% this year, and then another almost 20% for next year. And their biggest market has always been North America. That's still the case, but this last quarter sales were up 6% in North America. That's a great number. That right there tells you about the housing recovery, because North America has been weaker for them. They've gotten a real big boost off of South America because of Brazil and the home building that's been going on down there. That was still up about 5 or 6% this last quarter too. Those are their two biggest markets. So as long as they continue to see those kinds of gains in those two markets, it should be a pretty good year for them. You can see that the stock really reflects what's happening in the housing market because it's been rallying for well over a year now. And this kind of follows what the housing stocks themselves have been doing. So you might take a look at this chart and be like, where's the value here? It seems crazy because it's more than doubled here. But, it's trading a little under 14 times. That's not a bad valuation for a stock like this. You do get a small dividend with this guy, too.
I was looking at that, yeah.
Yeah,
Not
1.9.
bad.
Yeah, 1.9%. I guess that's not that small these days. It still is the play on housing. You can see it kind of topping out a little bit here as the overall markets have topped out. But again, it's not real expensive given its earnings growth projections.
Okay. Do you own either one of these?
I do not.
All right, check out other stock picks. They're on our website, Zacks.com. If you're watching this out in syndication land, get on over there and check back often because those stock picks that we put up on the website change very frequently, sometimes daily. With Tracey, I'm Terry Ruffalo.